Low volumes again on the local market today. Earlier I spoke to Martin Lakos from Macquarie Private Wealth. Martin Lakos, a very subdued day locally. Was that a surprise given offshore markets?
A surprise and actually pretty disappointing, Tiki, given that we had a very good lead from both European and US markets. We ended up sort of pretty much flat for the day, having been up about 30. Now, the background to that is that European markets were up between 1% in the case of the UK market, and the CAC and the DAX were up about 2.25% overnight, largely on the back of about three things. Firstly, that looks like the bailout for the sovereign debt issues is well on the way, with some agreements being made. And also the commencement, obviously, over the weekend of the no-fly zone over Libya, and it would appear that things are improving on the news front in regards to the Japanese nuclear power plants issue. So that certainly helped markets and sentiment, and that followed through to the US market as well. The US was also buoyed by some M&A activity, mergers and acquisitions activity, with AT&T making a $39 billion US bid for T-Mobile, and the market was up about 178 points on the Dow Jones, and that's despite the fact there was weaker existing home sales that came through.
So the local market just lacklustre?
Totally lacklustre. Look, volume wasn't too bad, still about $5 billion. So there's some activity taking place, but there just seems to be no momentum. Obviously we've picked ourselves up from the bottom, and in some cases, quite significantly so, with the uranium stocks generally rallying between 15 and 20%. The banks have obviously improved, and so to the resources. But from this point on, at 46.50, we're going to probably need an additional catalyst to really see the market move ahead.
Now, New Hope, the coal miner, has announced a bumper bottom line profit, but all is not as it seems.
No, the profit was pretty solid, $81 million. It was actually down a touch from last year. But I guess the key thing was what was their outlook. This is a company that's done a lot in mining investments. They've owned coal mines. They've got current production going, which is saying is going quite well, but being affected by the ability or the availability of rail transport. They weren't really affected in a production sense from the floods. But what they are saying is that the costs are rising, both on the rail side and production costs, and also that they're seeing that their interest income, which is quite substantial following the sell out of the Arrow Energy transaction that took place late last year, their cash levels have subsided, largely through some transactions and some tax payments that were required through the year. So interest income down a bit. Dividends going to hold up at 5 cents. In fact, I think 5.25 for this year. So on the whole, not too bad a result overall, but interesting to see the costs rising.
And still with energy, what are the prospects for local LNG producers as a result of Japan's nuclear problem?
Look, Tiki, there's absolutely no doubt that, this is really the talk of the town at the moment. What's the viability on nuclear? I would say that it would certainly appear that nuclear is well embedded in terms of power generation. France has got 80% of its power generated out of nuclear power stations. But it's more likely we're going to see higher regulation. Obviously, plants are going to be checked and rebuilt, and solidly improving safety standards. That's all a good thing. And up until this particular situation, LNG, although it looked very good for Australia, there was plenty of production coming on stream. What is now appearing to be the case in the talk of the town is that LNG might be the bridging gap for energy demand going to China and Japan. Japan had, up until the accident, or the tsunami and the nuclear accident taking place, had about 8 to 10 new power stations planned over the next 10 years. That's probably going to get delayed. China certainly is wanting a mix of energy opportunities, both from sources and different supplies, so both coal, LNG and nuclear, and they've got nuclear plants planned. But it does augur a lot better for the LNG industry here in Australia. And quite clearly the three stocks intimately involved in those areas are Woodside, Santos and Orso. So it does appear the prospects are generally improving for those three over the next 3 to 5 years.
Martin Lakos, thanks again for talking to Late Line Business.
My pleasure. Thanks, Tiki.